Hi, I'm Bree from Grafa. Up next, we have Willis. And you're live with Grafa at Token 2049 in Singapore. We're super interested in what the creative minds have to say about crypto and blockchain technologies. And up next, we're thrilled to have our guest, Trent from Willis. Hi, Trent, how are you?
Good, thank you. Thanks for being here.
Thank you for coming. Trent, can you tell us a little bit about your role and how it integrates with Willis?
Yeah, so I'm the Fintech and digital assets industry leader for Willis Towers Watson, one of the 4 largest global insurance brokers in the world. I've been leading the team for about 18 months now. Like many people, started off in a TradFi insurance underwriting role about 10 years ago, and pivoted towards this 18 months ago. It's a very global role, so dealing with creating new products, finding right insurance partners, and upskilling our people around the world, with particular focus on collaborating with the US team, given the amount of digital assets activity out there.
Incredible. And can you tell us more about that emerging trend between traditional TradFi and this emerging market of Web3, especially as it correlates with insurance?
Yeah, so most traditional financial institutions, some of whom were extremely anti-crypto a few years ago, have all dabbled, are now extremely into crypto, dabbling into it. You've got large traditional financial institutions who have kind of offshoots now, Standard Chartered being one prime example of that, with Zodiac Custody. And a lot of fintech companies as well are investing in blockchain technology, or some of them even becoming a digital bank themselves. So there's a lot of interconnectivity right now between the 3, if you think of TradFi, fintech, and digital assets. So I think the skills that we kind of bring to the core is we have the traditional financial institution insurance broking background, and we're using the kind of our knowledge there and trying to create the right products for these digital asset native firms who are investing quite heavily in crypto, fintech, etc.
Sounds incredible. Obviously, it's a strongly emerging market and there's an absolute need there. Can you clear up any misconceptions that people have, especially as you're approaching it, lessons learned,
Yeah, sure. So I specialize in financial and cyber risks. That's a quite niche part of insurance, and that is pretty much the biggest risk for a lot of these digital asset or fintech firms. So there's 4 kind of main products that I'll deal with. So directors and officers liability. So that's if the company or the directors get sued, investigated by a regulator. Obviously massive risk for crypto companies. Pretty much the first insurance that a crypto company should think about, protecting their own directors and officers. Their personal assets are at risk on the line, so it makes sense to have that. There's professional liability as well, so that's pretty much anything the company does if they get sued for misleading, deceptive conduct, breach of their professional services, or if the technology platform breaks down and a bunch of people start suing the company, there's recourse for defense costs and settlement under the professional liability policy. Then you've got crime, so that's probably the one that has the biggest highlight. So if you think of the big kind of, I think there were 1.4, or the Bybit earlier this year was a $1.4 billion crime loss, so to speak. So something like that would potentially be covered under our kind of insurance policy. And then you've got cyber, so that would cover all associated costs and liability as well. That's attached to a cyber breach, and business interruption coverage as well for the organization.
Absolutely vital, and I know with an emerging industry that's just going to keep growing, it's going to become more and more relevant. Are you seeing a lot of case studies at the moment which has shown that insurance has just been vital?
Yeah, so I think if I kind of go back to the last one, because there was something I wanted to mention, but I think there's a lot of common misconceptions about insurance and digital assets. So I think one prime example being the FTX scandal. I've even read on LinkedIn from fellow peer insurance brokers themselves who've said that the insurance market didn't pay out on FTX, which is completely false. So there were multiple directors and officers of insurers who paid out limit losses on FTX, so providing defense costs to multitude of directors and officers that were represented that represented FTX at the time. There were many different entities that had different policies as well. So really, that's quite a good case study. And because it's a well-known scandal, so if you just type in Google, you can see all the kind of there's lots of press about it, and there's I think there was one or two insurers that were kind of disputing the payment, but most of the insurers all kind of, some of them gave the $5 million payment kind of straight away. So yeah, good example for insurance, and obviously a buy bit as well. If they did buy insurance, that would be a good case study as well.
Absolutely. Well, thank you so much for your time, Trent. It's been a pleasure, and we wish you all the best.
Yeah. Cheers. Thanks a lot.
Thank you. You've been live with Trent from Willis at Token 2049. For more news and interviews, head to the Grafa at grafa.com.